Hello, I'm Jim Adams. Today I want to share with you how I did last month selling options. I actually made $2,065. In the video today, I'm going to share with you how I did that. And at the end of the video, I'm going to actually go over the trades and the analysis that I did and how I decided to make those trades. So I think you're going to enjoy what I have for you today. So glad you joined me. Let's go ahead and get started. Welcome to the Easy Investing Income channel. I also have a blog which you can see on the screen that also goes along with my channel. I have lots of areas of the blog that can help someone who's getting started. You can also see I have a section for lessons, and these are lessons that I've set up that if I was to do it again are the steps I would take to actually get started. So the primary reason I did this is I wanted to show people that you can actually trade options without making it absolutely crazy or risky. You can what I call sell options. It's almost like selling insurance. You can do it in such a way that you're not putting your livelihood at risk, and you can make some really good side money. I originally started my journey hoping to make 1,000 a month, and I went well past that. My best month's been 3,000. Last month I did 2,000, like what I'm covering in this video, and I've kind of had a number of months in between those. Part of it is I could probably make a lot more, but this is what I need to be financially independent. I also, with my portfolio, earn quite a bit of dividends. So between the dividends and earning this extra income, it allows me to be financially independent. I can do what I want, and this is something I enjoy. I'm also setting this site up as well as the channels for a place for my son to go to so he can also learn how to invest and how I invest. So I'm glad you joined me. As always, please subscribe and click that like button and the notification button. I'm going to keep this as simple as possible. The market has been fairly volatile lately, which when you're selling options, and I really like selling puts. I sell cash secured puts, and I also sell what's called vertical put spreads, and they're another way, almost another way of looking at a cash secured put, but you also buy an option that's a little bit farther out of the money as a way of keeping it a little bit safer. I won't go into details. There's plenty of blog posts and other videos you can watch if you want to learn more. But let me go ahead and jump into what I did this month. Again, I did over $2,065 in premium, and that's selling options. I'm, like I said, not typically an option buyer. I also, many of my trades were puts. I think of all my trades, I think I did only 12 trades in June, and I believe 9 or 10 of those were puts. Only there were only a couple of covered calls, and then I also a good number of my trades were rolls. I think maybe almost as many as half of my trades this month were just literally rolling current positions into a future date and trying to gain more premium, and then also trying to get a better strike price. And in every instance, I've been able to do that. Also, the only position that I'm in a bit of a trouble, and I'll share that when we're looking at the actual trades, is with Microsoft. I've only really done one or two what I call vertical credit calls, which you're doing the same idea, but you're doing it with call options instead of put options. And I did it on Microsoft, and Microsoft has gone through the roof. So I've gotten myself in a little bit of a tough situation with that, and I'll talk about that a little bit more when I share my trades. Um, so I didn't do another point I want to make is I didn't spend a lot of time doing these trades. I did a total of 12 trades. I did, I think, on average, 2 to 3 trades a week. I rarely did more than one trade a day. I think I had maybe one day I had 3 trades. And usually, if that's the case, it's because the market's having a bad day, which this is one of these weird things. When the market's having a bad day, I'm kind of having a good day, especially with selling cash secured puts or vertical credit puts, or a vertical put credit spread. I'm still getting used to all the terminology. So, and you can tell from what I'm saying, I'm not a professional. I'm not a professional financial person. I did have a degree in finance in undergrad, and then decision sciences degree, master's degree. But I'm a hobbyist. I'm someone who's doing this because I enjoy doing it. So I hope you can gain a lot of insight here and how you can really change your life. And I know I've changed mine. So let's go ahead and move into the actual trade. So let's bring up the spreadsheet. So this is for June, and every month I have a spreadsheet, and I also have a Patreon page where I post all these spreadsheets as well as some unique content for just Patreon. For instance, I've got, you can see on the left side over here, I have a list of all the stocks and ETFs that I'm interested in. Well, I also have more information out on Patreon, and I'm also going to, once I have enough patrons, I'm going to be doing weekly conference calls where you can discuss what you're doing. And I really want to be there to help people. So if you need help and you want to start doing this and you're just too fearful, please contact me. It's not that difficult. It's not, and in some ways, it's a little less risky than actually buying stocks. My last video, which I'll have a link to, I actually talk about how selling puts is really, in some ways, less risky than buying stocks. So let's see. So I had, like I mentioned, 12 trades. My first trade was Apple, and I actually, it was a roll. So I originally had, I believe I placed this back in May, and I had done it. This is a put, so this is a roll put spread. So I'm rolling the put into the future. So originally it was a put at $124, meaning I'd be willing to own, and I still am willing to own Apple at 124. So if it gets assigned, I'd be okay with it because I do want to own it there. It it was in the money, so I decided to roll it, and I rolled it to a lower strike price, and I actually narrowed the spread some. So I went from 124 to 122 for what I was trying to get it for, and I actually increased the outer arm from 110 to 112, which you can see these values. So, and for that, I actually, you can see here, if I pull these four values together, I made, see if I have the right trades in there. I made $206, which for just a few minutes of work, that's well worth it. So that was my first trade that I did, and I did it back on June 3rd. Then I did two covered calls on the 4th. I did one on Coke, and I do a lot on Coke, and I did it for 70, which is way out. And this is one of the only trades, and I do these fairly often because I own a lot of Coke. I inherited it, and the cost basis is really, really low. So I will do what's called a leap, which it's a covered call, but it's far into the future. So the expiration date is actually January 23, and I'm okay with if I could get $70 for Coke in January of 23, I'd be happy with that. And for doing that trade, I earned $1.15, so I made $115 for selling that covered call. I also did a covered call on Intel, which I have several hundred shares of Intel, and I did that at a strike price of 64, expiring in about, I guess it expired, or it's getting ready to expire. It hasn't expired yet. So it was like a 6-week covered call, and for that I earned $59 per contract, and I did 3 contracts. So if we scroll over, you can see, I actually made 175. So that's something else that I've been doing is since I have 300 shares of Intel, I'll do one that's a little less risk. And here you can see I did it at 0.2002 delta, which is like an 80% chance that it would expire outside the money. And it's going to expire actually this Friday. And right now I think Intel is like 54, so it should expire no problem. So let's move on to the next one. This is the one Microsoft that's gotten me into trouble. So I rolled it from on 614. I rolled it to 730, and I took a slightly higher. Let's make this a little smaller so it's a little easier to get around on the spreadsheet. Um, yeah, so I rolled it out. And again I got more premium. So let's go over and see what the premium is. Let me move up here. Oops, I went too far. Okay, so I made 135. I think that's 135. So not bad, not a ton of premium, but it got me out of trouble. And I'm looking at having to roll that again this month because it looks like it's going to expire on the 30th. So I'm going to have to do something again. I'm going to have to roll it again, and hopefully I can continue to get more money or more premium for it. The next one is Intel. I wanted to buy more Intel. It's at a good price. So this one, again, I had to roll. It was a put spread that I rolled from. So the outer arm is 45 and 52. So I actually rolled it out from 618 to 723, and I increased the value a bit on there. So that I don't always do that. That's pretty unique, but I primarily wanted to get more. Yeah, so I did pretty good because it's let's see, I made 137, so not bad. So, and in Intel, it's in such a small range, so it's fairly easy to roll and it's fairly easy to manage it. So in most cases, it's expired. I typically haven't had to roll Intel very often. And then Kellogg is another one that I needed to roll, and I rolled it from 618 to 917. And again, I rolled it a little bit lower from 62.50 to 60. And I also, so the spread is a little less. Instead of 10, it's 5. And let's see how I did on that one. So looks like I made about 130. Yeah, 135. I think that 125. I think that says. So not bad. So you can see how many of these I actually rolled. And then next I did a cash secured put, and I did that for 49. I think Cisco is like 53, and it expires on 8/20. And for that I picked up 76 cents for a premium, or $76 for every 100 shares or one contract. And I got two contracts, so you'll see that's again $150 after premiums. And then I did a Prudential vertical put with 87 and a half was the strike price of the inner arm, or the arm I shorted, and then the outer arm was 77 and a half. And Prudential, this should expire. Well, it has till 917, but Prudential has gone way up. I think it's over maybe as much as 105 or 110 right now. So, and I took very little risk. Here you can see the delta. I really like Prudential. Prudential is one of the stocks that I don't own currently, but I want to own it because it's performing so well, and it also pays a really good dividend and increases the dividend every year. So it's something I trade quite often. DVY is the next trade. I did a vertical put on it. It's an ETF, and it consists primarily of dividend based stocks, so dividend aristocrats. And I did 102 and 90 for it. and I believe I took in some pretty good premium. So let's look. Yeah, 472 minus 201. So that's probably my biggest trade, $271, and it was fairly far out. So it just, I saw a lot of premium there, and I wanted to take that chance. And DVY, it's an easy go-to sometimes because I really like the ETF. It pays a nice dividend, and it has companies, most of the companies that I like to own in it. So it's one of the ETFs. If I'm not quite sure what I want to invest in, I will look at it. So it's probably my seventh or eighth trade I've done with DVY, and I have had DVY's been the only ETF that's been assigned early, and it unfortunately the only times I've been assigned early is when I've not kept track of the ex dividend date. So I'm trying to do a better job of that. But even when it was assigned, I got it at a good price, so I'm not too upset about it. Next is I rolled a covered call with KO with Coke, and I rolled it out at the same price, and I gained some more premium. So let's see, I paid $12 to sell it, and I gained 87, and I believe I did two of those, so I made pretty good premium with that. 172 minus 25, which is 147, so just shy of 150. And this is a new strategy I'm thinking of selling these every month close to the money, keeping an eye on the expiration date and the ex dividend dates. So it brought in quite a bit of income, and it's something I can do since I do own a fair number of shares of Coca-Cola. The next one is a vertical put I did on Cisco. This is the food processing company, and it's again another good company at a good price that pays a good dividend that I like to I like to own and I'd like to trade with, and I kind of understand what it does. So, meaning I have a pretty good feel for what price it's going to be below, like what its highs are going to be and what its lows are going to be. So for that, I did, and you can see here I've got this in red, 76.5. So the stock price had gone down to 76 and a half, and the strike price, the inner arm is at 70. So I'd be willing to buy Cisco at $70. And again, it pays a good dividend. It's a good dividend aristocrat. And then it's only a $10 spread. So really, for the two contracts, I only needed $2,000 worth of margin. I've gone into that in some of my other videos, so I won't go into a lot of detail. But you typically, it's the difference in the two strike prices. So you're talking $10, and then multiply that by 100, which is 1,000, and then by the number of contracts, which makes it 2,000, and then you subtract whatever premium you brought in. And here you can see I brought in pretty good premium, so it looks like, what is that going to be, close to 160? I think I have those two right. Yeah, do I have that right? Yep. So I brought in 175 for, again, a little bit amount of work. And you can see with all of these, I have very few that are just single contracts. I'm doing mostly two contracts, and that's to make more per trade. I'm trying to do fewer trades and make more, trying to get closer to 150 to $175 per trade. And then, so that was the 11th trade. The last trade was Bpmp, which is British Petroleum. It's like a closed fund. I can't really explain it, but it pays a really good dividend. And this, I did a cash secured put on it, and since it's only, you can see here, it's currently at $14. So I did the put at 12.5. So, and I did two contracts, so I only needed like $2,500. Let me move this out of the way, and you can see here I did that's the cost, but the premium looks like it was 60. Yes, or that's 69. So I made $136, and it's something I'm very willing to own at 12 and a half. I probably pays 11 or 12% dividend. So it's something that's interests me, and I actually, with the craziness in the market yesterday, this is the day after it dropped 800 points yesterday. I actually picked up 100 shares of it because it dropped to, I think, 13 and a half, and it's paying close to a 10% dividend, and it has pretty good numbers. It was recommended on Invest Talk and some of the other places I like to, podcasts I like to listen to, and so it's something that's I'm willing to take a look at. And being that it's inexpensive, I don't need a whole lot of margin to deal with it. So here you can see I broke it down. You can see I had 5 where I rolled the existing positions, 3 where I did vertical credit spreads, 2 I did cash secured puts, 2 I did covered calls. So most of my trades again were puts. You can see here my average trade was $171, so that's really good. That's one of the highest averages I've had, and it was one of the fewest number of trades. And each week I didn't spend much time. I think I actually made 1 or 2 of these trades using my phone, so not bad for not a whole lot of work. This is the values of my account, or different accounts, and how much of cash. I have a lot of cash. It's been building up as I make more and more of these. But just for this month, this is kind of a breakdown for the whole year. So if I did this every month, I'd be earning 4.14 of additional return on. It's actually 2 accounts, not 1. If I remove the cash, I'm earning more like 5%. And you can also do this with your retirement account. So I'm actually doing it with my retirement accounts, and my hope with that is when when I hit 62 or whatever, or 60, I think I'll probably get Social Security at 67. I would have doubled my retirement account. So that, in a nutshell, is the trades that I did. Not rocket science. It's fairly easy to make these trades. I'm a Schwab person, so I do all my trades in Schwab. I don't have Tastyworks or any of the other accounts. And between the mobile app and Schwab's regular website, I'm able to do all of this and earn a fairly good income. So I hope you enjoyed this. I hope you've learned something, and I hope you return and subscribe and hit that notify button so you know next time I do a video. I am planning to try to do another video either late this week or early next, related to the volatility in the market yesterday. It was actually a really good day for me. I had over 5 trades yesterday, and I think I made close to $600. So I was going to share how a down day can be a good day, which that wasn't the case for me before. Down days were always scary days. So thanks for tuning in. I hope you have a wonderful day.